All right, today we're going to break down the story of a crypto token that absolutely sent shockwaves through the market. Seriously, it's a wild tale of insane highs, crushing lows, and a really powerful lesson that was kind of hidden in the data all along. So let's get right into the crazy ride of $SIREN.
Just imagine waking up and seeing this. The price of SIRN just explodes, launching up over 400% in a single day. The hype was, well, it was instant. Social media just lit up, that classic FOMO kicked in hard, and traders everywhere were just scrambling to get a piece of it, thinking, this is it, this is the next big one.
And then, bam, this happens. In just 1 week, the price completely craters, wiping out 90% of its value. All those people who jumped in on the hype, they were now trapped, looking at absolutely catastrophic losses. The whiplash was just intense, and it left the whole market asking one simple question.
So what was really going on here? Was this the next groundbreaking AI crypto project we've all been waiting for? Or was it just a perfectly set trap for traders who got caught up in the excitement? Okay, let's dive in and really pull back the curtain on this thing.
You know, every massive crypto pump, it always starts with a great story. And the story behind SIREN? It was incredibly good. It was this AI-powered narrative that, kind of like the sirens from the old myths, was pretty much designed to be irresistible.
The core idea was honestly brilliant. SIREN promised this fully on-chain AI analyst that could dig through all this complex market data and then spit out simple, easy-to-use trading strategies. It was sold as this amazing tool to level the playing field, to give regular retail traders, people like us, access to the kind of AI analysis that only the big guys usually get.
And then they added this really cool twist. The AI had two different personalities. You had the golden siren, which was your calm, analytical, long-term advisor, but if you were feeling a bit more adventurous, you could follow the crimson siren, an aggressive AI built for those high-risk, high-reward plays. This whole dual persona thing was just genius marketing. It had something for every single type of trader.
So, the story was amazing. The tech sounded revolutionary. How in the world did so many people lose everything? Well, this is where we need to dissect the anatomy of the trap. We got to look past that beautiful story and see what was really happening on the charts when the music stopped.
And that's the thing. While the hype online was just deafening, the price chart itself was quietly sending out all these little warning flares. The data was painting a picture of some serious weakness, a picture that was totally ignored by everyone caught up in the emotional frenzy.
If you look here, you can see the charts were just flashing these classic red flags. First, that huge price pump, it wasn't backed by strong buying volume. That's a huge warning sign. Then, the price ran smack into a major resistance level, like a ceiling where sellers were just waiting. And maybe most importantly, an indicator called the RSI, which basically measures buying momentum, was actually going down while the price was going up. To any experienced trader, these signals were basically screaming that this whole rally was running out of gas.
And all those ignored warnings lead right to this predictable four-step trap. It's so classic. First, traders see the pump blowing up on social media. Second, that fear of missing out, it just takes over and leads to an emotional, impulsive buy. Third, they completely ignore all those technical red flags we just talked about. And finally, the music stops, the price reverses, and they're trapped, left holding the bag as the value just plummets. This quote from one of the analysts who covered this just sums it all up perfectly. The crucial point is this: the market rewards people who are patient and who do their homework, not people who just react to hype. The ones who understood the structure, they saw the trap coming. The ones who just followed the move, they fell right into it.
But believe it or not, the weak chart signals, that was only half the story. There was a much bigger, much scarier risk lurking just beneath the surface, and once you see it, it changes the entire picture. So let's talk about the whale in the room.
And this is why digging into the on-chain data is so important. This chart shows a really shocking level of supply concentration. I mean, a staggering 66%. 2/3 of all SIRN tokens were held by just a handful of wallets. Think about that. It means the vast majority of the market, all those retail traders, were basically just playing in a sandbox that was controlled by a tiny group of insiders.
So why is that so dangerous? Well, when a few wallets hold that much power, the risks are huge. They can easily manipulate the price, pump it up to create hype, and then dump all their tokens on the very people buying into that hype. The valuation is incredibly fragile, and if they all decide to sell at once, it can trigger a total liquidity crisis, where the price just collapses because there's nobody left to buy.
Okay, so let's put it all together. When you really look at SIRN, you see two completely different stories playing out at the same time. You have the amazing, appealing hype of the AI narrative, and then you have the cold, hard reality that the data was showing us.
And you can see this tug of war right here. On one side, the bull case. You had a powerful AI and meme story, tons of trading volume, and the promise of future products. But on the other side, the bear case was just overwhelming. You had extreme volatility, that insane supply concentration, no actual working product yet, and a massive, massive risk of price manipulation. The hype was loud, but the reality was incredibly dangerous.
And that really brings us to the single most important lesson from this whole SIREN saga. A great story, a great narrative, can absolutely make a price go to the moon. It can attract a ton of attention and money. But it's the on-chain data, the cold, hard facts, that shows you the true risk you're taking on. And ignoring that data is just a recipe for disaster.
The story of SIREN is really a perfect case study for the market we're in today, where these compelling narratives are absolutely everywhere. It leaves us with a really critical question we should probably ask ourselves with any investment we make. In a world that is just saturated with hype, how do you find what's real? How do you find the truth?